Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK, and in today's episode, I'm just going to give you guys a quick, brief market update, kind of what I'm seeing in the charts as far as the S&P 500, the S&P Minis futures, and a few of the different time frames on Bitcoin, some levels that I'm watching as far as downside potential or some, lower time frame bullish hopium. Now I'll try to keep the video somewhere between, around 10 minutes, but knowing me, it'll likely go over just because I am a little long-winded, just like I'm being right now. But hopefully you guys find some value in today's video. And as always, if you're liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Alrighty, we'll start out on everyone's favorite chart, which is the SPX or the S&P 500. I don't have a whole lot to say on this chart, no real in-depth analysis. This closed about an hour and a half ago my time, probably an hour and a half ago. And this is actually a chart that I posted, or a note that I posted yesterday in my Telegram group, but it's still relevant, especially if we zoom in a little bit closer so you can kind of see. What I put was that price action is currently being rejected by the 200 SMA. Now in my chart, that is this yellow line. And it may need to consolidate or pull back, and I'll show you something here in a minute that will kind of confirm that as well, or have confluence with that idea. Now, just like, I don't know if you guys have been watching some of my other recent videos lately where I posted about DOT and XRP and some analysis on that. But this is the 4-hour time frame. Those were daily charts we were talking about, but still, it still applies to me when it comes to things like this 200 SMA. You can see if we zoom in that a body closed above it the first time, but my general rule of thumb, my aggressive rule of thumb is that you need 2 straight bodies, and the second body needs to be the retest. And you can clearly see that it broke out, but then the second body did not close above it. The next one retested it actually as resistance, and it ended up being the next 2. So we had 3 straight candles here after that, breakout candle, and we never got the retest. So it makes sense now that it's being rejected and heading back down. Now we do have this blue 200 EMA, which is the exponential, and that could act as temporary support. But ultimately, if we double click and kind of look down here at some of the indicators, it's still overextended. You could use a little bit of a pullback or at least a consolidation phase. Now the RSI down here has a bit of an uptrend going, and you can kind of see if we combine it with the stochastic RSI. We look each time the stochastic crossed back down into this purple zone. We'll put some Alt V's on here to kind of track that real quick. So these are the last 3 times that the stochastic, which right now looks like it wants to leave, what they would call overbought conditions or overextended, and head back down for a potential retrace. We can see that previously, when that happened, it was already in the midst of a pullback, but then it finished pulling back another 3%. In this case, we can go to the next one. It was already pulling back, but it went another, 3.5%-ish. The most recent one, which would have been here on July 22nd, was already in the middle of its pullback. It was about the end of it on that one. It only went back about another %. Now, granted, it did bounce. We don't know. It did bounce sooner than going all the way down to the oversold, conditions, as they call them. And we don't know if that's going to happen yet or not. But what we can say, though, is we look at the RSI each time that happened. It kind of traveled sideways, and then it found support on this line. Traveled sideways. This one bounced before the line. You can kind of make a support and resistance line across here where this has been, my head's hopefully not in the way, but it's been resistance back here on the RSI, kind of a zone. So, it didn't make it all the way to the trend line, but it did bounce. So on this pullback, doesn't mean we won't lose our RSI upward momentum. We may pull back and bounce either here again, putting in like a little double bottom, or maybe we go all the way to the trend line. But that could actually happen while this comes down. Question is, how big of a percent do we get? Well, the most recent one was only 1%, but the 2 before that were about 3. A 1% at this point, if we cross down, in the near future, would only put us back down to just below this green line. The 3%-ish one has a little bit more confluence down here with one of my green boxes of support. Let's go ahead and double click back out of these indicators and let me show you what I'm talking about. So if this continues to pull back, we can see here on my chart that I had this previous little zone of support. Well, it was resistance, and then I've switched it recently to support. But the top of it acted as resistance here, back here, even once right here. And then most recently, it's acted as support on the bottom side of it. If we are going to have a decent size pullback, The two levels I would actually be looking for now would actually be, we want to see a higher low. So the two levels I'd be looking for would be around 39.82, which is this white line, and the top of this green box around 39.40. So what would that mean? Well, let me adjust this so that we can track this tomorrow and kind of update depending on if it does continue to pull back. This would actually be the zone that I would be looking for a bounce. You can even put a little note on here that says would be bullish to see a bounce at this level. And that's just something we're going to track over the next 24 to 48 hours. That's not saying this has to happen. It could find support, which would be really bullish, right here at the, this other green line that I have around 40.62. But the other confluence that I'm looking at least on the 4-hour chart, as to why this zone makes sense, is that might be, could potentially be around the area that some of these other moving averages down here, which is the red and pink, which are my 50. The pink is my 50 EMA. The red is my 50 SMA. And then you have these 21s. Now the 21s may not act as support the first time. They're not super strong moving averages. Maybe on the daily they are, but not so much on the 4-hour. So maybe we see something like this where it comes down, loses those, bearishly retests those, comes back down here somewhere about the time these moving averages have caught up. Then you see a bounce at the top of this green zone, maybe some sort of a little double bottom right here, and then maybe we have the momentum. A lot of the indicators may have reset at that point, and we might have the momentum to at least try this major zone of resistance, which I've marked in a previous video a few days ago that we had support back here, and then this was a big rejection around this area a couple different times before our pullback. And so that's going to be a strong area that we'll contend with, but we'll keep track of this, obviously, over the next, like I said, 24 to 48 hours. That's kind of when I would expect, the next 2 days, 2 or 3 days, for this to kind of play out if this is what happens. So then that brings us over to the Bitcoin 4-hour chart. I just wanted to kind of line up those dates of when the SPX on the 4-hour chart of its own, when the stochastic was overextended or overbought, and it left, overbought and went down into the, the purple zone that we discussed on that previous chart. How did that line up with what Bitcoin did after that? Because we got to assume right now, as it's just about to cross into that area, that that's what's going to happen. And you can see here that I've marked off the dates. So we had June 28th, Bitcoin was already in the midst of a pullback, but when that cross officially happened, it dropped another 8, almost 9%. This was the next one over here, July 11th, and it was already in the midst of about half of its pullback, but it dropped another 8, almost 0.5%. And then the most recent one was back here on July 22nd, which Bitcoin had already pulled back a little, was having a little rally back up, but it put in a lower high, and from that point it actually dropped. From that level where the cross happened, which was about here, it dropped another 10%. So you can take an average of that, it's about 9%. Now this is only 3 cases, so it's not like that's gonna be enough to really have some, average that we could take to the bank or anything, but just to kind of give us an idea, I guess, of what's possible. Where price action is right now, if the stochastic on the SPX tomorrow, opens up and confirms that it's going to cross down into that purple, we could get a little rally first, over the next, till it opens tomorrow, till the SPX opens. But if that were to ultimately happen, what would that look like? An 8% would put us back down here, kind of around the 21,200 level. The average of about 9% would put us right back down around 21. And if we saw another 10% one, that could see us go as low as this previous low back here at about 20,750. Now keep those targets in mind of around 21K or slightly above or even slightly below as we head over to the Bitcoin daily chart to try to find some confluence with some other ideas that might support a pullback of that size. If the SPX is going to pull back, 3%, from this point, Bitcoin, if that's going to happen, will pull back with it. That's almost inevitable. But what kind of a pullback could we expect? Well, this chart shows a couple different times that we had, an uptrend followed by 3 straight daily big red candles with big bodies, right? And the pullback from top to bottom on this one between June 26th and the bottom on June 30th was around 14.5%. And then, most recently we had here where we had 1, 2, 3 straight red candles. And, from top to bottom there, the pullback was around the exact same, 14.5%. And so I've kind of back tested that, obviously. And here, most recently, this top where we've seen 1, 2, 3. We're actually working on our 5th straight red candle, but 1, 2, 3, just like those previous 2 instances. You know, what would that look like if we saw about a 14.5% pullback? Well, that'd put us back to this green box I have, which is right around 21,000 even to about 21,150. So just something that kind of adds confluence to that previous idea as far as an area that would make sense. It would be kind of scary and a little bit bearish to see in the short term, but at the end of the day, it would still confirm a higher low if we were to bounce at that area. We had this high, most recently a higher high, not by a whole lot, but we did get it. This is our last low around 20,700. So this would still represent a higher low and would mean that we'd still technically, at least on these midterm time frames, be in an uptrend. To finish off today's video, we're going to hop over to the Bitcoin 4-hour chart, and I move my head up to the top just to kind of stay out of the way. Now, this is a very, very messy chart, but I'm just going to kind of walk you through my thought process on it really quick. This is something I posted in the Crypto Revolution group that I mention often on the channel. It's a paid group that I'm a part of, and as always, I will leave a link in the description for them as well. You can do your own research, go check out some of his YouTube videos and see if that's something that interests you. But I'm an active member in that group as well, and I posted this chart yesterday, just kind of mentioning that, you know, these 200 EMA, which is the blue one on my chart, and the blue 100 SMA, just how price action has reacted to them. Now, previously, while we were back here in early July, it came up, it just barely below the 2 acted as resistance, got rejected, came up, you know, broke up, and then used the 200 here actually as support, the 200 SMA, but ultimately got rejected again by the 200 EMA, pulled back, finally was able to conquer both, and went on a little bit more of an uptrend, right? Well, back here, you can see now, I'm kind of suggesting that the opposite could be true now, where first it's going to use the SMA as support, whereas back here it first used it as resistance, and then next it used the EMA as resistance. It's using the SMA as support back here on July 26th, and we're right now that EMA is sitting at about 22,000. Says over here 484, so almost 23,500. So in the short term, if we want to remain short-term bullish, this is the area that has a lot of confluence to me. I'm not going to go over all of it right now, but on some of the other charts, like the 8-hour, that's where the 50 EMAs are sitting. On the daily, that's where the 21 EMAs are sitting. It's also an area back here where we can see previously was major resistance back here. This zone was also resistance here, acted as support temporarily, but then was resistance again here. So we're already kind of in that zone right now, and we've bounced off of it the first time. You can also kind of zoom in and see that we're in a little bit of a falling wedge. And so if we want to remain bullish, what we could look for, you know, this is an idea that supports not going down to 21K, you know, in the short term, but actually bouncing and potentially putting in a higher high than this most recent high back here of about 24,600, right? This would be an idea that supports more of a short-term bounce and what I'll be keeping an eye on. If we can break out of this little falling wedge, you know, and flip this as support, the top of this zone, putting in either a double bottom or a higher low, then at that point, if we can break back above about 23,700, we'll say, if we can break back above that and flip that as support, there's a good chance that we'll at least head back up here and put in some sort of a higher high, which would just continue to confirm in the short term an uptrend, which would then give us a lot more confidence that if we could put in a higher high up, somewhere up around 25K, that maybe we come back down and we're able to actually flip, you know, 24K or 23.8 as support and continue to trend higher. So on the short-term time frames, there is still a possibility to remain a bit bullish, especially if price action can continue to consolidate right now above this $22,500 range. The longer it's above it, the better chance it has to bounce from it, in my opinion at least, because it's just giving the indicators time to reset. Now, if you look here on the 4-hour, we're actually down here, you know, where it is technically considered oversold. And so this could cross up and give us the, you know, energy to at least break out of that wedge. Now, does it give us enough energy to put in a higher high? That remains to be seen, but at least on the 4-hour time frame, things are a little bit oversold and does have potential to put a little rally in. So we'll just have to see what that does. If it ultimately gets rejected and puts in another lower high, let's just say it does break out of the wedge but gets rejected at like 23,700. At that point, I would start entertaining the idea of us going back down to 21K. But until we lose 22.5 to 22.6, there is still that short-term hopium, I guess. And that is that. Appreciate you guys. Please remember to like and subscribe, turn on those post noties, whatever the heck they're called. And as always, you guys have a good rest of your day, and we'll catch you tomorrow. It's tea.